Okay, guys, we have already done with that of the accounting equation, and now today we'll discuss about double entry principle. So we have to start double entry principle. This is basically to ensure that every financial transaction affects at least two accounts, and this will help in maintaining balance of accounting equation that we have already studied. That was asset, liability plus equity. Done. Now, let me scroll it down. Okay. Okay. The other thing that you have to know that the key principle of double entry accounting. So we have three basic aspects. That the first one is dual aspect. By this we mean that every transaction has two effects, that is debit and credit. The second thing that is debit and credit. So debit is recorded on left side of account, while the credit is recorded on the right side of account. Clear? And the third thing that you have to remember, that is balancing. So this is the key principle of double entry accounting. By balancing we mean that the total debit must always equal to the total credit. Clear? Now let's move on. Here we have to study the actual stuff that is provided by ACCA. Double entry. So double entry is a method of recording transaction and the journal ledger. Fine. Now each transaction is entered as debit. It may be entered debit or it may be credit to reflect the duality of every action. So let's say if you have an action that you are purchasing asset, and this is, let's say, cash transaction. This is the cash transaction. So what you will do, you will debit asset. The asset may be property, plant, and equipment, and all the thing, and the credit will be cash. So if you see here, this one debit by 100 and credit by 100. This reflect that this transaction have two effect. They are affecting two account. The first one is asset account that you are purchasing, and the second is again asset account, that is a cash account. Clear? Now the component of the account equation are reflected either debit or credit balances. Having more corresponding balances mean having more than that of component. Now you see this is the debit balances and these are the credit balances. So when you are increasing it, there's increase in assets, so that will be debit. Increase in expense will be also debit. Increase, this means this, if you increase the asset expenses for drawing, then that will be on the debit side. Now if you are increasing the capital, it also be on the debit side. Increase in the income and increase liability, that will also be on the credit side. Okay. Okay, fine. Now we have some example here. One by one we'll discuss. The first example is here. If a business has asset worth $25,000 and liability is 15,000, then the capital belonging to the owner may be calculated as 15 as the asset less the liability, and this will be your capital. Let me show you how this works. Like, this is the asset is equal to liability plus equity. So when you are looking for the liability for the equity figure, then you have just to shift this liability to that side, and if you change the sign, so it will be negative. And I'll write here 25,000 less 15,000, and the equity will be 10,000. If you see here, this is the clear answer. Now the owner will have 10,000 of capital and the business. Clear? Now Here we have another example, and this is just activity for you homework. So you can do it by yourself, but I will do it here for you guys. Now, in the following activity, calculate and enter the missing figure to complete the accounting equation and replace this sign, interrogation sign. So make sure the equation balances remain asset, liability, and capital. These are the asset, liability, and debt will be capital. So when this amount is asset, and if you deduct this, then you will get the capital. If you see here, this is the answer. Question number one answer is capital will be this, because you have to reshuffle the equation, and if you do, then it will be like this. Okay, use the same formula and just shuffling the item, the figure you need, and if that should be on this side and the remaining will be on the other side. Clear? You can use this formula and answer all these questions. Okay, now let's move on. We have another example how transactions are recorded in the ledger account using a double entries provided in section 1.38 later in the chapter. Now consider the transaction and their effect on accounting equation. So the owner put 20,000, mean injecting capital into the business. Now the money has been paid into the business bank account. What happened? It means that the owner has just injected the amount into the business. This is the business, and this business, the owner injected how much? 20,000. So means the capital, and these 100 is now in the bank account. That means that is the cash for the asset and cash for the company. If you see here, asset bank 20,000, liability is 0, and the capital is also 20,000. So this equation, this is the basic equation that you have to remember to understand the accounting. Now the cash in the bank is now belong to the business, because now this is a business asset, and the business has a responsibility for this amount to be paid later on to the owner. So that is the capital. Clear? Okay, fine. Now let's move on. We have another transaction, and this is the purchase of furniture, business furniture for new shop costing this amount, and paid it from the bank account. So now the total amount in the bank, you see the bank account was 20,000, and you have paid this amount, the remaining will be this. Now you purchase the asset, this is the asset account, so you have purchased the asset, you paid the asset, and you also purchased the asset, so the total will be the same. The capital is also the same. Now the all asset value has not changed. Equation show that 15,000 coming out of the bank account, decreasing the bank account, and creating a different non-current asset furniture account at the cost of this amount. So the total cost, the total amount on the asset account is the same, but now this is a different category. You have now to create another account that is a purchase account, because you have purchased something. Okay. Now we have transaction number 3. Transaction number 3, as a business purchased some dresses from supplier and credit base, so this will create liability, and supplier agree that the business is paid 30 days to the business pay. Now if you see here, this is a bank account, this amount, this is pay for furniture. Now you have purchased some inventory, this is the dresses, and that is also, so the total amount is now this one, because you have, this is the credit balance, this amount is, as it is increased, because you have now in the liability position, and you have to pay this amount 700, because you have just take some inventory by credit. So when you are purchasing something by credit, let me show you here double entry. Debit will be inventory, and the credit will be payable, the amount that you have to pay in the future, and that is 700. Clear? Okay. You can do all these things, the transaction number 4, by the same way. And now here, if you see here, increase in asset, increase in liability. So when increase in asset, it means this is debit. If you see here, the increase in liability will be credit. Decrease in expenses, credit. Increase in income, debit. Decrease in liability, debit. Decrease in asset, credit. Increase in expense, debit. Decrease in income is also debit. And we have discussed this, that the 3 things, that asset, the second one is expense, and the third one is drawing. So when these component increase, then it will be debit. On the other hand, we have also discussed that income, capital, and equity, and these increase, then it will be credit. Clear? And we'll discuss the general ledger in the next lecture. So thank you for watching.